Okay, so again, the trial balance. Okay, this is going to be compiled at the end of the period, and it's going to have all of our account balances as of all those transactions that happened in the period. We had debits and credits in all the accounts happening, but at the end there's going to be some balance. Okay, and then we're going to compile all the balances into this thing, this report called a trial balance. And from this information, we're going to make those reports, the financial statements. Okay, so the financial statements are just an outcome of the information that's in your accounting system. What's in your accounting system are accounts and their debit or credit balances. Based on that, you're going to take this information and make the income statement, the statement of equity, the statement of retained earnings, the balance sheet. Because if you remember in the income statement, there's no mention of debits or credits. The balance sheet has no mention of debits or credits, right? That system of debits and credits is just for your accounting system. Once you have the balances, you then format them into a report, okay? And the report may have negative numbers. It's going to have other stuff because it's formatted for a reader, okay? It's formatted for some financial statement user, okay? But in our accounting system, we just have debits and credits, okay? So I think this is a big source of misunderstanding between the financial statements, which are again are reports, and the accounting system, which is based on our system of debits and credits, okay? But they're related in that the balances that you get from your accounting system, that's what you're going to use to make your financial statements. Okay, is there anything unclear about this? The difference between your financial statements, which are reports, and your accounting system, of which this trial balance is part of, as a system of debits and credits. Is everyone clear on that? Okay, so again, there's no negative numbers here, but on the financial statement, we're going to see negative numbers and things being subtracted away from each other. But it's really just a debit balance netted against a credit balance. That's what it's going to be. Okay, that's what is happening in the accounting system. And we'll see some examples of that with like depreciation, where you have a balance for, you can see equipment has $20,000 balance as a debit balance, but the depreciation you've taken against that equipment will be in another credit normal account called accumulated depreciation. And in the financial statements, they'll be subtracted for one another. Okay, but in the accounting system, one is just a debit balance, and the other is a credit balance. Okay, yeah. So the balance sheet again is a report that's just showing our basic uh, accounting equation, right? It's going to list assets equals liabilities plus equity. It's just going to show that balance, right, in a report format. There's no debits, there's no credits. It's just going to be numbers and descriptions of what those accounts are. The trial balance, it's going to list all your accounts. It's going to have all the revenue accounts. It's going to have all the expense accounts. It's going to have the dividends. It's going to have every single account in your accounting system listed by their credit or debit balance. There's some order to it. So you can see at the bottom here, these are all your income statement accounts. So this is what's going to go on your income statement. You're going to then combine it with these kind of to give you your equity statements. Okay, so basically your statement of retained earnings and your statement of shareholder equity. And then all this stuff up here, these are your assets and your liabilities. Okay, because remember, the information from the income statement, the net income, is then incorporated into your statement of retained earnings, the ending retained earnings balance. And you can see here, there's a balance here. This is a starting balance. Because remember, for statement of retained earnings, we have the starting balance plus what? The starting balance for retained earnings plus net income minus dividends equals the ending balance, right? So that ending balance of retained earnings then goes into your final balance sheet. So all this stuff, this gets kind of netted together into your ending retained earnings balance, and then that goes in your balance sheet. And then that's combined with all this stuff. So eventually all the balances get included somewhere in the financial statements. Okay? But you're listing them all out here in the trial balance. Yeah. So I think we should discuss one more thing. What happens in your trial balance if the debits don't equal the credits? Okay, so we can see here that they're equal, 47,000, 47,000. That means that as long as those two are equal, my balance sheet in the end, when I go through this whole process, the balance sheet will balance. Okay, so what happens if my debits and my credits are not balanced in my trial balance? Okay, something is messed up. So there could be a couple of things. Number one, you could have forgotten some account. Okay. Again, if you're using this software, it's not going to forget, right? It's like automated. Okay. But for your homeworks, you're going to have to like kind of double check that you didn't forget some account. Okay. So that could throw it off. If you just totally forgot to include accounts receivable, your credit balance is going to be more because you forgot this debit balance of accounts receivable. Okay. You could have switched what should have been a debit balance with the credit balance. So if you put accounts receivable, but you put it as a credit balance by accident, that's going to throw it off. Okay, so you have to make sure that you have put the debit or credit balance in the right side of the trial balance. And this math, let's say you had 10,000 on the credits and 18,000 on debit 10,000, credit 18,000. The difference is 8,000. And if you divide that by 2, it's 4,000, right? That means that maybe what should have been a $4,000 debit, you made as a credit. Okay, so why is that? So let's say this is accounts receivable. You accidentally put it as $4,000 as a debit. Okay, so what will happen when I correct it? When I make that, you accidentally put it as a credit, it should have been a debit. Okay, so if I move it, right, I now cancel this and I move it here, this 18,000 is going to become what? So this is going to go to 14. And what about this? 14. Okay, so that's why the difference divided by 2 is going to indicate which account is potentially on the wrong side, because it will have double the effect when you correct it.